It's not that silver has underperformed or is counterintuitive in its nature. It's why are 8 banks holding it down the way that they are. Now, people would say, well, can that go on forever? No, it can't, because for the first time over the last 2 years, countries that are now coordinated, motivated, sophisticated, and wealthy, mostly the BRICS nations, are saying, okay, well, we'll stand for delivery. And the LBMA, zoom, their inventory is dropping. Now we're T plus 8 weeks. Sorry, we're not the T plus 1 day that we told you we are. And now you're seeing record imports into the United States. Record, month over month over month. Huge amounts. So the question is silver traded freely? No. Will it? Yes, I believe it is, because what is happening for the first time ever is that these banks in the West, who are stupid as a mud wall by doing this, are now being challenged by the rest of the world for delivery.
Andy Schectman, owner and president of Miles Franklin, has been closely monitoring what he describes as a critical shift in the global silver market. According to Schectman, the United States is experiencing record silver imports month after month, signaling a dramatic increase in physical demand that could fundamentally reshape the precious metals landscape. The numbers support Schectman's observations. U.S. silver import volume for consumption reached approximately 4,200 metric tons in 2024, though this figure remains below the peak of 6,730 metric tons recorded in 2020. More tellingly, recent data from May 2025 shows year-on-year silver imports rising by 0.063%, with particularly sharp increases from key trading partners. Mexico led the surge with imports up $70.7 million, representing a 30.6% increase, while Japan saw an extraordinary jump of $36 million or 7,160%. Argentina also contributed significantly with a 100% increase worth $3.48 million. According to his analysis, silver hasn't underperformed naturally but has been deliberately suppressed by a few powerful entities through market manipulation tactics. However, Schectman believes this manipulation is becoming increasingly unsustainable. The growing challenge comes from BRICS nations, which are now demanding physical delivery and rejecting paper-based silver claims. Russia appears to be leading this charge among BRICS nations, spearheading a coordinated strategy to accumulate silver. Central banks in Russia, India, and China are continuing to stockpile precious metals, creating a sustained demand pressure that could trigger what Schectman anticipates will be an explosive price surge. Before we dive in, don't forget to like, share, and subscribe to our channel. Hit the subscribe button and turn on the notification bell to stay up to date with our latest updates.
Then you get to the point where you take a look at COMEX. There are 8 banks, 8 Western commercial banks, 8, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market in silver. This tiny little market, you have 8 banks that are massively short. And the LBMA, they're trading 3.5 times the annual global mine supply every single day, 10 times the availability of the silver that they have backing those contracts. All of this stuff. Now ask yourself, why? Why would 10 Western banks, 8 Western banks, hold a short position as extremely large as it is, and almost all of it naked, meaning it's not backed by anything? And the question is, in my mind, answered by the reality of the military-industrial complex. Think BlackRock. BlackRock is the custodian, along with JP Morgan, of the world's largest silver trust, SLV. You can naked short the hell out of SLV if you want. So let's just pretend I'm right for a moment. A company like BlackRock, who owns all of the military manufacturers like Raytheon and all of the companies that make the weapons, well, they also are very deep into silver, whether it be PSLV or being a custodian of SLV and GLD. And then you see countries like the Ukraine get blown up with those weapons. Who then gets the reconstruction contract? Oh yeah, it's BlackRock. My point to you is this. It's not that silver has underperformed or is counterintuitive in its nature. It's why are 8 banks holding it down the way that they are. Now, people would say, well, can that go on forever? No, it can't, because for the first time over the last 2 years, countries that are now coordinated, motivated, sophisticated, and wealthy, mostly the BRICS nations, are saying, okay, well, we'll stand for delivery. And the LBMA, zoom, their inventory is dropping. Now we're T plus 8 weeks. Sorry, we're not the T plus 1 day that we told you we are. And now you're seeing record imports into the United States. Record, month over month over month. Huge amounts. So the question is silver traded freely? No. Will it? Yes, I believe it is, because what is happening for the first time ever is that these banks in the West, who are as stupid as a mud wall by doing this, are now being challenged by the rest of the world for delivery. So I would say silver offers potential that I've never seen in any asset I've ever owned or would ever think of buying with such low downside. And, I would say to those people, have strong fingertips, trust your gut. There isn't an asset with a better setup on the planet, not just for the fact that it's undervalued or it's being shorted, but the plurality in uses, monetary uses, digital uses, solar panel use, military use, all of these uses for silver in different areas makes it an asset that, and your folks in Canada are lobbying to move it from a industrial to a strategic metal. It is a strategic metal. And my favorite guy on Twitter, Eric Young, King Kong on Twitter, Yeung, I think it is, he says the Chinese are doing the same thing. They're shorting the price in the West to beat it, join them if you can't beat them, and buying it all around the world. China is the second largest producer in the world of silver, and they're flying all around Latin America. Go ask Sean Kunkun from Dolly Varden. He'll tell you they're flying all around Latin America, going right to the miners like Dolly Varden and saying, we will buy your doré and your concentrate and pay double what the West will. Doré being crudely refined bars and concentrate like a sludge, and they ship it back to China to refine it. Now, why would the second? And Sean says because it is strategic, they see the future and they're trying to pickpocket every last ounce on every shelf across the globe. But if you short it first in New York, then you go all around the world and buy it where it's not reflective, where its acquisition doesn't reflect the price change. And in particular, going directly to the miners, where you're disintermediating the market altogether. So yeah, in my mind, Charlotte, it is the most undervalued asset of a generation. And I say that with 1,000% sincerity.
Andy Schectman observes that global accumulation of gold and silver is accelerating dramatically, even as prices remain suppressed on the COMEX and LBMA. This divergence has created what Schectman warns could be a critical disadvantage for the United States if it fails to act. May witnessed the largest gold and silver delivery in COMEX history, reflecting record monthly inflows. Schectman questions who is behind these massive purchases, noting that most metal is quickly leaving COMEX vaults, likely pointing to aggressive central bank accumulation. This rapid exodus suggests a fundamental shift toward immediate physical possession over paper claims. Central banks have raised their gold reserves to over 36,000 tons, the highest since the 1970s, marking a strategic shift away from dollar-based assets. This surge reflects rising concerns over currency stability and a growing preference for gold as a sovereign, non-politicized reserve. The global gold market is experiencing a profound transformation that could lead to significant price revaluation. Several powerful forces are converging to create what may become one of the most remarkable bull markets in the history of precious metals, with potential for gold prices to reach $8,000 per ounce, reflecting underlying supply-demand imbalances as physical demand outstrips traditional market mechanisms. Meanwhile, the global silver market is expected to experience a significant shift in 2025, with the deficit projected to narrow by 21% to 117.6 million troy ounces. This marks the fifth consecutive year of structural deficit, though the gap is closing due to an increasingly favorable supply-demand balance. Let's get back to the
most undervalued asset on the planet. The word that I think of is asymmetrical, low downside, high upside. I have been one of the few people who have either been too stupid or had the guts to say that I believe it's the military-industrial complex that has been suppressing the price of silver for a very long time. And I think they've gotten caught. Let me explain. Most of my career, no one ever stood for delivery. Never stood for delivery. Right now, we see the LBMA, the London Metals Exchange, which has watched its inventory. If anyone out there Googles silver stockpiles of LBMA, you'll get a graph. And it's like a ski hill. It's straight down to the lowest level of silver since they started keeping records in the 140-year exchange. It's being drained. Now, the LBMA is a T+1 settlement, meaning T for trade plus one settle. Third day your metal is moving. Well, they're telling us that it's T+8 weeks because they don't have enough in the way of trucks or manpower to move it. David Jensen, who does an amazing job on Substack, will tell you that they have a 190 million ounce float. They have 800 million ounces of silver there, of which 190 million are available to be delivered against the contracts. The other 500 plus million belong to the ETFs largely. But they trade over 1.9 billion, yes, 1.9 But he goes on and shows proof, and it's been verified, that they only post the final settlement numbers, that they're trading 10 times that amount to 1.92 billion ounces per day, 3.5 times the annual global mine supply, 10 times the float. So if everyone stands for delivery and you only have 1/10 the silver there, do you see a problem? Well, yeah, we're T plus 8 weeks now. Sorry, not the T plus 1 that we told you, because we don't have enough in the way of trucks. So let me back that up. How does it all happen? 3 years ago, when I gave a speech at VRIC, where I always see you, Jay Martin's conference, and Jay is here, and it's the only other conference I always go to. Check it out. It's a good one, in Charlotte's backyard in January in Vancouver. I said there's 500 ounces in the tip of a Tomahawk cruise missile. That's the research I came up with. And I don't know anyone saying that before that. A guy comes up to me in the audience and he says, I work for the Department of Defense. I almost fall over. He says, I have designed and helped develop cruise missiles, and I think there's some silver in it, but I think you're wrong on the number. Okay, sorry. He says, I'll get back to you. I don't hear from him. 2 years ago, he shows up with a stack of pictures. He says, you remember me? I helped develop the Tomahawk cruise missile. These are all declassified. And he showed me the pictures, and he said, you're right, I'll be damned. Between 13 and 14 kilograms of silver in the cone of almost every cruise missile you can think of. Hellfire, Tomahawk, Patriot, you name it. And all sorts of high-tech weaponry and aerospace and submarines, they all have silver in it. And now okay, so the military needs all this silver for high-tech weaponry. It used to be calculated in the supply-demand numbers out of the Silver Institute. Not anymore. It vanished. We have a 250 or 60 million shortfall every year, and no military applications in the supply-demand number. The rest of the world is accumulating to be record. The May contract just a month and a half ago was the largest delivery of both gold and silver in the history of the COMEX market. Who is buying all of this gold and silver? And most of it's leaving the COMEX. Where's it going? Who's taking it? And these are really big deals. So if you realize that goes hand in hand with the central bank buying, I think someone got Trump's ear and said, not only do we need the gold and silver, but mathematically we're in trouble. And we do need a reset. And I would argue we're in the midst of that reset right now. But how do you reset the system without falling on the sword? Well, you find a villain. And how do you find the villain? Well, you incentivize everyone, all those mean countries who are being so unfair with us. I want to address that for 1 minute. Are they really being unfair with us? Because Triffin's dilemma says if you are the world reserve currency, you will always have a trade imbalance, period. You cannot provide the world enough dollars just through trade that they all need. So you have to export dollars, which means the dollar is strong, which means other currencies are weak, which means your manufacturing is non-competitive.
Silver is increasingly slipping beyond the traditional control of Western exchanges as price discovery shifts toward physically settled Asian markets. This transformation is making it more difficult for conventional market participants to suppress silver prices through paper mechanisms. Gold and silver are no longer merely safe haven assets. They have become strategic instruments in a rapidly evolving global monetary landscape. With central banks accelerating their accumulation and physical demand rising despite suppressed prices, both metals are quietly positioning themselves at the heart of a broader financial realignment. Is silver on the verge of a significant move that could redefine its role in the global economy? Share your thoughts in the comments below. If you enjoyed this video, don't forget to like, share, and subscribe. Only 4.5% have subscribed, so hit the bell icon and turn on notifications to stay updated. Your support enables us to continue delivering the latest market insights to you and the broader community. Thanks for watching.